Ross, great to have you on. Thanks for being with us. This is a huge day for everybody, but especially you, because you've liked Disney, right? We're watching for Disney after the bell.
Yeah, I mean, granted, I've liked Disney since I was 13 and I got my first shares of stock, so this isn't a new story for me.
Well, I think, first of all, impressive that you got shares of stock at 13. Your parents were smart people. When you talk about Disney as obviously a huge entity, can you break it down a little bit, what some of your expectations are?
Well, you know, this is the last of the quarters of digesting the Fox acquisition pre-Disney Plus launch. So, you know, I don't really care much about this quarter, to be honest, because it's almost irrelevant to the next 4 quarters for Disney, which look amazing. So, you know, really, you know, they had the Lion King, you know, helping out the bottom line on basically some weak Fox movies out. And then you had a pretty decent theme park number, but we did have hurricanes in Florida, but also the launch of Star Wars down in Florida. So we expect decent numbers, but, you know, once again, it's all about the future and it's all starting next week. So I couldn't be more excited about the future of Disney, not to mention Star Wars looks amazing and I can't wait. And although I'm sad it's the final sort of episode, but so much more will be released on Disney Plus through The Mandalorian and other spin-offs of the Star Wars franchise. We also have Frozen coming out.
Yeah.
And also Ford versus Ferrari, which is actually the best Fox movie Disney got, is also coming out this quarter. So Disney's got an amazing quarter in front of it.
So anyhow, let's just break it down. So they have theme parks, they have movies, they have Disney Plus. So when we look at this quarter, you're saying that it's less important, but it's still important. It would be a big miss, for example, if they talked about intense competition from Netflix or something like that going forward. If they gave us some sort of guidance about headwinds or foreign exchange headwinds or global growth, any one of those things could come up and that could be problematic.
Well, yeah, I mean, certainly, like you have the protests in Hong Kong, which has affected the park there. You have, I don't think Netflix is a competitor to Disney Plus. I think they are complementary. I think really, you know, honestly, they have so much going for them right now. Even this quarter, I think this quarter was solid for them. I didn't see anything that was out of the ordinary that we should be concerned about. I think the biggest issue is how much they're spending launching Disney Plus. So it's kind of like launching a new, you know, massive project here. Is they're spending a lot on advertising and they're spending a lot on content, which they're going to get the return over the following 12 months. So I do expect that to keep earnings down year over year, you know, which is fairly substantially down. But these are investments that Disney needed to make to move into the next, you know, phase of its growth. And that's why I'm calling it Disney 2.0. The new Disney is so much more exciting than the old Disney. And we expect, you know, 100 million subscribers in Disney Plus over the next several years.
I love it. I love it. So it's sitting at around $132. You think that it moves back to its highs of over 145? I mean, in 2020, we talk about all these blockbusters, billion-dollar movies, the Star Wars lineup, which you said you're excited for. We have the Star Wars theme park as well, and the Mandalorian trailer, which has been exciting. So where do you see Disney heading? What's the upside potential for the stock as an investment?
Well, I think, you know, depending on what numbers you give Disney, you know, they're all over the map for next year, from, you know, as low as $5.50 to as high as maybe $7. If you take somewhere around $6 in earnings next year and you assign, you know, a 30 multiple to it, you get to, you know, $180, which I think is fair. So we're somewhere, we think it's worth between, you know, $175 to $200, depending on what multiple people assign to the growth rate. But I think what people are going to find when you look at Netflix's valuation at 90 times earnings and Disney at a little over 20, you sort of say to yourself, boy, you know, Netflix valuation is probably going to come down and Disney's valuation relative is probably going to go up. So, you know, I think the upside could be substantial with this company also because I still think institutions are underinvested in this blue chip stock. And, you know, to really throw this kind of growth behind it reminds me a little bit of Microsoft right now. It might be a big company, but it's growing real fast. And this is going to be a great driver of growth for the next decade for Disney.
What about another name? Can I get your attention on another name? And that is Tesla. I know you've liked it. I know that Elon Musk is back to Twitter. He threatened that he might get off it, but he's back on. But David Einhorn, whom we all know from Greenlight Capital, put out an investor letter and really gave a bearish tone once again to Tesla and the risks and how they treat employees and compensating the customers. And it didn't sound too good. What are your thoughts? What do you say to that?
I think Einhorn has lost a fortune on his short, even from that letter when the stock was priced at around, like, I think he said 240, 250. The stock's now up to 340. It's probably the worst investment he's ever made, shorting Tesla. You know, he doesn't know what he's talking about. Honestly, it's like anybody, you know, if I just focused on the most negative features of my best friend, well, he doesn't sound like such a good friend, right? Of course, Tesla isn't perfect.
What do you love about Tesla?
What I love about Tesla is it's the only solution for EVs in the entire world, and the cars being mass adopted all over the world. And they're just opening a brand new plant in China, and the Chinese people are just so excited to buy Teslas that are made in China. I actually saw the first one today with the Tesla in Chinese on the back of the Model 3. Like, this is the hottest company in the world. And with the problems with climate coming front and center and every government needing to deal with it, solar, which Einhorn is most critical about, the solar acquisition, which is just crucial to Tesla moving forward. Crucial. Right. We need solar across the globe, and Tesla's going to be a leader, and they're just gearing up to do that now.